So one thing I hate is traders that throw random trades on Instagram and want to impress everyone around them. And that's where the new trader, the novice trader, falls into their trap of thinking that just because they executed a trade and had a sniper entry means that they're a good trader. I hate that stuff, because if you've been a trader for more than 6 months, you can see past the fluff. You can see past the smoke and mirrors. If you see a trader posting a trade on Instagram and on that day it was a win, that kind of trade, because it was a random trade based on some random confluences that was counter trend, that was based on just a support and resistance level and one EMA, maybe that day it worked. Maybe that day it had its reasons, but you can recognize that that kind of thinking, that kind of trading over a long-term horizon, over 100 trades with the same methodology, with the same confluences, would not be a profitable trade. And that's what I see all over Instagram, all over YouTube, is people flipping accounts from $100 to $100,000 in 30 days, taking random trades with over leveraging, or people throwing stupid trades on Instagram that don't even make sense. So that's why whenever I post anything online, I will never just throw randomness. I hate that stuff, and I think that's what gives this industry a dirty, ugly name. What I'd rather do is, as I always do, is whenever I post a screenshot on Instagram, I'll post it with the timestamps. So I take an entry with a screenshot. In the top corner, you can see the time I took the entry, and you can see exactly where price action is, and you can see me exactly executing. Screenshot posted. When that trade is now break even, another screenshot. In the top corner, you see the time, and you see exactly where price is. You can't Photoshop live timing, and then later on when price is in its profit, then I'll take another screenshot to show exactly the result of the trade, as opposed to just an after where people don't even know if it's Photoshop or fake or whatever it may be. People are too smart these days. Someone like yourself is too smart to fall for this clownery. I think you guys want to have trades in context. Anybody can get a winning trade. Just like you can flip a coin enough times, eventually you'll get heads. The same in the market. If you keep buying and buying and buying, eventually you'll get a winning trade. So that's why the trades that you will always see me take, they will look very similar every single day. It's not just random. One day it's Head and Shoulders, the next day it's Ichimoku Cloud, the next day it's Elliott Wave Theory, whatever. Like, it's consistent, repeatable, mechanical, and that's what a real trading plan is. So what I'm going to show you today on my laptop is a trade breakdown, yes, but what I want you to not focus on is this specific trade. Rather, I want you to understand that this is one of my trade entry types, is one of the models amongst a select few. And if you go ahead and backtest my Instagram stories on the trades that I've taken over there, which I've shown pretty much every single day for like 3 years, you'll be able to see that there is hundreds of trades like today that are the same entry type, the same criteria, the same trade model. So that's what I want you to really recognize, is the importance is not necessarily one trade or whatever profit was made or whatever entry type I can show you. That's not important. What is important is recognizing the methodologies behind it, the confluences behind it, the entry type, the reasonings, the trade model, the daily cycle variance, the liquidity cycle within it. That's the key of this video. So let's jump right into this trade breakdown. So one thing that I do want to show you is TradeZella. I love this tool, and it's something that I think we should all be using every single day in our trading. Just like in a business, you need to know your numbers, you need to know your KPIs, you need to know your revenue, your profit margin, your costs. You need to know all of these things for a functioning business. But then people come into trading and don't know their data. They don't know even simple things like their win rate and risk reward. But beyond that, you need to know, what am I spending in commissions? What kind of strategy out of the trade models I have, which ones are performing well and not well? What are the seasonalities? TradeZella will give you reports, it will give you deep insights and give you a better understanding of your trading performance beyond just an equity curve, how much profit you're in, and your win rate. And I think in general it's just a must-have for any trader. So over here is my general performance, but this is the trade I wanted to cover in this video. So this is a trade from Tuesday, the 12th of September, and it was a sell that I took on GBP USD, and that's the one I want to cover. So TradeZella is very nice because it will show you automatically logged. It will show you exactly what candle you entered on, and then it will show you where you took partial, and then it will go on to show you where you fully closed out the position. For me, it was over here. But also it will give you a little bit more data. For example, it will give you not only the simple stuff like the pips and the return per pip and so forth, but it's going to track your average risk to reward. It's also going to track everything on the report section, which I'll show you another time. But in general, this is what I kind of wanted to show you, is this trade that I executed on. So what I want to do is, before we go into the full breakdown, is look at a trade replay. So this is the price action of Tuesday. This is coming into London Open, and we're just going to click play, and you can see basically that I was looking at this Asia range. Within this Asia range, we had a spike up, cleared some liquidity on the left, had an internal break of structure, recognized the supply zone, and I want to see the interaction in that supply zone. So as we get to that zone, price does a complex pullback all the way up. As you can see, we are approaching that entry zone. As we get into that supply area, what do we see? Price gives this. It gives higher low, higher high, mitigates into supply, gives an internal break of structure, lower low. That gives me a entry criteria confirmation. Comes back to mitigate that area. Mitigation done. We can now strike an entry. And then that's where we see the follow through reaction. And then if I just let this play out, it gives you kind of a live summary or a replay summary of the trade that I took. And then it'll show you exactly where I took partials and so forth. So if I just run through this price action, it'll basically give you a rundown that I entered here, took partials here at a 1 to 3, and then closed out at a 1 to 10, the full volume. And that's kind of a rundown of that trade. So this is TradeZeller. I love it. I'd recommend everybody use it just for everything it has to offer, from reports to daily journal. You can then log your strategy. You can add tags. You can get all of these kind of things that, I mean, test it out. I don't have an affiliate link or anything. It's just something I think every trader should utilize if you want to take this professionally and seriously. So in this trade specifically, I was able to bank almost $8,000, but that's not what the important thing I want to recognize is. If you remember from my last video, I stressed the importance of the partial systems we have to take profits, where you have the subjective price action based approach, which is trade by trade basis. You are determining if this is counter trend or pro trend, or if it's a swing trade, where's the liquidity pool, where's the structure point, and you're taking partials based on that. Whereas the system that I prefer, which is the fixed partial protocol system, and in that system, it is objective. You take partials in an objective way, not based on the price action of the day, rather it's totally fixed at a 1 to 3 risk to reward, 50% volume, at a 1 to 10 risk to reward, 50% volume, and your full trade closed out. Meaning on a full win, the maximum you can secure of that 1 to 10, even if it goes on to 1 to 20, 1 to 30, the maximum you can secure is 6.5 R, because at 1 to 3 risk to reward, you secure 50%, 1.5 R, and then at 1 to 10, you secure another 50%, so 5 R, so 1.5 plus 5 is 6.5 R, and that is the maximized trade. Now, that might seem quite inefficient from a trade by trade basis. For example, a swing trade that could have been 1 to 30, you only secured 6.5 R. But in that previous video, if you remember, I stressed the importance of you don't need to maximize the performance of each trade. You need to maximize the performance of your portfolio as a whole, and I showed in detail why that was quite important. So do refer back to that video another time. But in this trade, you can see that's exactly what I'm executing on. So I risked about $1,000 plus commissions, and my average R was 6.5 R approximately. The reason being is because at 1 to 3 risk reward, I took my 50% volume, which you can see right here. I executed on this candle and I exited on this candle at a 1 to 3 risk reward, just taking the liquidity of this area. And then at the 1 to 10 area, which I'll cover more in detail, at the 1 to 10 point, I took another 50%, closed the full volume, which you can see over here. I executed on 30 lots so then at 1 to 3, I took 15 lots off the table and I secured 1,800. And then at 1 to 10 risk reward, I secured the rest of the volume, another 15 lots, and that banked me 6.3K. So overall, my risk in was about 1 point something K, and my total out was about 6.5K. So a 1 to 6.5 risk reward on this trade. And that's how I like to run my trading now, because I'm very intra-session, very intraday approach. I don't really care about holding a trade to 1 to 30 anymore. I've more found consistency in relying on small wins that are compounded. So that's why even if I'm wrong, even if I've got the incorrect directional bias, very often I can be wrong and still catch this 1 to 3 risk reward and banking 1.5 R. And many times, if you look at my equity curve in a previous video, I've shown it in detail, you'll see that my account is compounding. Even if I was wrong multiple times, I'm still securing some wins. So at the end of the week, I might have had a bad week in terms of theory, in terms of directional bias, in terms of reading the market, but I still might be up 7% just by banking small wins, which is why I think this is an optimization of the portfolio as a whole, which is why I like to use this fixed partial system. So this is first of all the 1 hour time frame, and I want to give a quick top-down analysis of this very briefly. First thing that is very easy to recognize is we are in a bearish trend. So let's just mark that out. We have lower low, higher low, and then we go on to form a lower low over here. So we know that we are in a bearish trend, but within that we also have our substructure like this. So let's read into this substructure a little bit more detail. But overall, we know that we are in a bearish market, and that is the main push over here on the higher time frame basis. And then we also know that our break of structure happened over here. Okay, so that we know that the relevance push therefore is we had this push down, made the break of structure, retracement, continuation was over here. So this is the intraday main push that we are focusing on, and we want to see a potential continuation of that. So we know that we are aiming to make a new lower low from a structure and trend perspective, following on from this main push, but we also want to recognize that the substructure is important. Now, the multi-time frame analysis comes like this, where we know that, yes, we are bearish, but this could be the start of a complex pullback, because this area made an internal higher high. So this is a bullish sign, and then this area failed to make a low. Because if it was bearish, it should go on to make a lower low. It made a higher low. So we've established an internal trend, and we could be having a complex pullback to where? Could be having a complex pullback to this area, or the extreme area, or the decisional area that led to this break of structure. There's a few areas price could be trending back towards. So we need to be aware that we don't want to get caught up in a certain time frame, and therefore we remain dynamic. So we're going to look at our intra-session time frames to recognize, are we going to continue bullish to come back to a supply area, for example, this one or this one? Or are we just going to have a little bit of relief here? We come to this area and then we see some sort of reaction here. And then if we see a continuation, we might be continuing bearish. Remember, we cannot guess the lows of the market. We cannot guess when the retracements are done. We remain using our intra-session timeframes to remain dynamic and flexible to update ourselves to multi-time frame analysis. And that's what's the key here. It's impossible to know where it's going to go. If it's going to go continuing bullish to the extremes or if it's going to continue bearish. We don't know how bearish this is. We don't know if this is the final lower low of this main push. Therefore, that's where traders go wrong. They are fixed to a bias and they think, oh, it's made a lower low in the market. We've had that internal break of structure. Therefore, we must be bullish, and they just look to buy all the way up to this area, which could work out, but it's not always the case. So our lower time frames are going to reveal that intention, and that's where you add in your structure cycle, liquidity cycle, and daily cycle, because these cycles are going to give us lower time frame confirmations to understand what is more probable and more likely to then reread our higher time frames. So we just get a quick brief look from our higher time frame. And the only other thing to recognize are we in a major demand area on the left? So we just scroll left and think, okay, well, our major demand area is going to be this area over here. So we do still have quite a bit of room, and we also know that all of this could be liquidity. So price could be targeting any of that. So for now, we are a long way away. This area that price reacted off is not really anything too significant. It's not a decisional because it didn't lead to a break of that. So it's not an extreme. It's just a zone, and therefore we're not too focused on where the lows are being made because we can still establish that it's probably going to continue bearish to at least here. So right now, from a higher time frame perspective, we are bearish. We now need to look at our intra-session time frames to reveal further. So let's jump into M15. So the M15 read, if I continue it on now, is our substructure. We had a lower low and a break of structure of the previous zone on the left. Lower high, lower low, lower high, lower low. And then this area made an internal higher high. Important. This area could have gone on to make a low. It failed to make a low. So this made a higher low. Now the reason that is important to recognize is because this could have been seen as a liquidity pool. This could have been seen as an inducement, a run of liquidity. And then with this internal break of structure over here, some traders could be falling into the trap of believing this was the break of structure. This was my FU inducement zone. Therefore, I should sell here. And that small reaction is the smart money trap because they are thinking, let's go on to make a new low because of these equal lows printed. Now, that's where people go wrong because they don't understand the daily cycle properly and they don't understand liquidity properly. So we have to actually read it first from structure. That is going to be our basis. And then we'll get into the other things to really read the details. So I'm going to be continuing on from that and saying this area failed to make a lower low and made a higher low that went on to make a higher high. So now we've got two legs of structure where we have our bearish push, bullish push out, bullish break of structure, failed to make a low, still inconclusive because this could be still seen as a run of liquidity and this area could go on to make a low. So when that area fails to make a lower low, we see the smart money trap and then we see it goes on to make a higher high. That's when it gets important because now we can say we've established an internal trend and we can now say that this is a bullish sign for the complex pullback. Now that we've seen that this could be a bullish sign, we could have a complex pullback. Where is the complex pullback going to go towards? Well, immediately this zone is of relevance. So we can look at this area and let's put that as a supply zone. Now I'm looking at this whole area because I'm recognizing this imbalance because right inside here, we have our internal mitigations. So when you do a whole POI selection, the POI selection is obviously from the low to the high. Okay, from the low to the high, that's where we determine a POI. But anywhere within that can be more valid and that's how you refine it. So when it comes to the refinement, we see that we have this push down, then we have the mitigation over here. So this area could be considered covered, mitigated. Then we have the push down, gives the BOS, then price comes back and mitigates that imbalance. And it even does a small run of liquidity over here, where we have these highs, we have this minor inducement. So this is reaffirming intent. This is reaffirming that we are bearish over here. And this wick came to simply consume more of that previous area and confirm that mitigation with a run of liquidity. So I know that this area is also covered. And then when we have this push down, we make this low over here, price comes back and remitigates that area. So we know that this area is by and large covered. And because of this area specifically, and I see the changes of character in there where we have build up, we have an inducement, we have a push down and break of structure, and then we have the mitigation within there. We have left a banker block. My refined area for this whole POI would be this zone, the banker block that we call it, with our imbalance over there. So that's the main area I want to be focusing. And that's actually where price is tapped into, this block over here. And I just want to put it above that imbalance because it can come and cover anywhere in that balance. So when I see the price has come into the first relevant area, that doesn't mean I jump into a sell, because then you'll just be selling at every single POI and you could take 10 losses before you come to the main extreme POI, for example. So we have to remain dynamic and we have to add in our structure cycle, which we have added, and then we add in our liquidity cycle and daily cycle to confirm, is this zone going to have a reaction, and then lower time frame confirmations to confirm if it's worth trading. We are just developing a thesis, a hypothetical scenario of what potentially could happen. So we've identified, as we are starting the day and we are coming up to London Open, I want to see what is our relevant intra-session POI. So our relevant intra-session POIs become this area of demand. This area of demand is important. We just need to see that we have liquidity pool over here, okay, and then we have a supply zone over here. And now that supply zone is following on from a nice area. That nice area is overall in a main push down. So we've come back to the extreme of that leg of that main push. We've established an internal trend of bullish, but we've also established a smart money trap over here. That smart money trap is where premature sellers got out. And therefore this is now just the Asia range building up, coming into our supply zone. And that potentially could now come down, for example, give an entry like this, and then come down to our demand area over here. That could be the London session of this day. And then potentially we could see price continuing up to come further into this POI, or just continue on that complex pullback up to these extreme levels. For example, we mentioned this area, which is also a valid supply, especially because it had a nice inducement and build up of that area, or price going back to this extreme level, which is also a valid supply area. So we know that price does not necessarily have to react from this area. It can just give a small reaction, but not necessarily follow through, and then continue the complex pullback up to that area. And we've established that complex pullback because this area made an internal high, failed to make a low, made a higher low, now internal high. If it makes another higher low, we could be trending and having that complex pullback up. But we do not get married to that bias, and we do not get married to the bias of it's going to be bearish. We remain dynamic, and we just use our intra-session time windows to see that sequential step and development. So London session can react in two ways. If we add in our Asia range, we can start to see that price has some favorable scenarios where we have this liquidity pool. Price could run that, give a trap, and then come back to this area, give a reaction, and that could be our London push, coming back up to target this area, and New York could give that reversal to continue lower. That could be one variation. Another variation could be price now comes up, mitigates the supply area, gives a follow through London session, New York gives this reversal window and continue higher. Or we could also get a cycle where we get push up into the supply zone, covering that smart money trap, coming into this banker block, and then trend lower, New York reversal here in New York session, and then a continuation the next day, for example. So there's quite a few variations that can happen, including just price goes bullish and continues the complex pullback, or price induces this area and then starts to continue bullish. So we don't know which cycle is going to play out, but we look at the telltale signs, and those telltale signs will be on M1, where we read the minor inducement, what the timing windows are doing, where we see those small runs of liquidity paired with structure, paired with follow through, paired with imbalances and these kind of things, that intentions that we'd like to see. All of this is going to be reading the language of price to reveal its intentions, and that's the key. We don't say today's daily cycle is going to be this or that. Remember, we don't know what's going to happen, and our job is not to predict. Our job is not to forecast the future. Our job is to react to price action with what is most probable and favorable, either in our thoughts to say this is probably going to happen, or if those ideas are strong enough through confirmations and confluences that are predetermined in models, if that gives us a strong enough inclination, then we can also execute on our ideas. So let's actually go now into M1 and do a final pre-read. This is our pre-read of the day before we jump into the day's price action. So when I do take a closer look at the M1 time frame, what am I seeing? I'm seeing, first of all, we have a liquidity pool to the downside. That is something that we know that price can be magnetized towards. We have our Asia range liquidity pools of either side. But before that, what I want to recognize is we've had this trend line buildup of liquidity, where it's saying to traders, hey, get into that sell. And then we get a nice spike during Asia session. That looks like it's a trap because it gives me a break of structure here too. So this is basically telling smart money traders that are coming and waking up in the morning, they're seeing highs, FU candle. Once they've seen that FU candle, they've seen a break of structure, and then they see this complex pullback. They come back to the extreme. They now see another internal break of structure relative to this area. Then they see this area, another break of structure. What is the market trying to tell us? The market is trying to tell smart money traders, this is a supply zone, sell, sell, sell. Okay, so we remember that. That is what the market is trying to show us. So we are smarter than this. You are smarter than this. So you don't fall for that trap. You read it again. You say, if that's what the market is trying to make very obviously seen, then I need to look at the opposite way. What could the opposite way be? that maybe this is all going to become a liquidity pool. Maybe this is a smart money trap, Asia high liquidity, and we might get a spike higher. Again, we don't put limits and execute on that idea. We just see that's what I could be waiting for. So I just remain adaptive. We are coming into Frankfurt Open. So I just see what is price trying to reveal to us. Okay, very quickly, what do I see? I see a strong push out in Frankfurt Open, a strong manipulation. So what has that done? That has cleared the liquidity of all of these premature sellers and smart money traders, but it's also established what? It's established another trend, which is equal lows, FU candle, because these sellers that got out in the market, they got this inducement. They are not confused. They're thinking, why did I get stopped out? Readjust the read. They'll now be thinking equal lows, FU candle, push out, retracement, equal lows, FU candle, bullish push out. What are they doing? They are now thinking, oh, I made a mistake on my previous read. This is now the equal lows, FU candle, bullish push out. So therefore I should be buying in this area. Where are their stop losses now? Their stop losses are all in this area. Okay, so what can I expect? I can expect now price to run this smart money trap area and now take out this smart money trap zone too, because now there's two areas traders are going to be readjusting their read. They're going to be thinking FU candle, so therefore I'm going to be putting that as a trap because it's at Asia low, and I know this area too is probably not a key area. And the reason for that is because I don't want to just jump out after a run of liquidity, after that inducement of Asia high and a smart money trap of this area, of these smart money traders. I don't want to be now just jumping into a trade with a bias. Rather, I would rather wait for confirmations and clarity, because I cannot say this was the smart money trap, therefore the real inducement, and we are going to be bearish. Or that this was the smart money trap and therefore this is going to be the real play, or if it's going to be a trap at all or not. I don't know. And because I have these doubts, I'm just seeing the runs of liquidity, and I need to pair not just runs of liquidity and trade. You see runs of liquidity and then real intention. Once you've seen the run of liquidity and then the raid and then the intention and then the directional biases that we've started to develop and then timing windows and lower time frame confirmations, that's where you start to piece the puzzle together and maybe formulate a trade idea. So right now it's a waiting game. So we continue to wait and we see what's the market trying to tell us. So we are having our trap premises. We are seeing where traps could likely develop. Price comes into this area just before London session. Are we going to see a reaction? Price runs that liquidity. Maybe now the smart money traders are thinking, okay, I made a mistake again. I got in too early, but maybe price is just coming back down to this area. So we've already had an inducement of this zone. That's fine, liquidity taken. But they are thinking equal lows, FU candle, push out, making a higher high over here, like this. They are thinking bullish push out from here, and they are thinking bullish break of structure because of this area. Okay, so when they're thinking like that, they're thinking, okay, let me come to this extreme FU candle and wait for confirmations. And that's what they're looking at. Because I have my Asia low liquidity and the other frameworks that I mentioned earlier, this is not necessarily the most probable scenario, but we cannot cancel it out. Remember, these kind of trades will still play out from time to time. Our job is to remain reactionary and not just have a bias and say this is a smart money trap or this is real. We don't say one or the other. We just say we could be seeing a trap, but it could also be valid. Let's wait and see for the reactions. So let's wait for that. We come into that area and look, there was no real reaction. There was nothing. There was not our time window. There was no reaction. Price just shot through it. So that's when we can confirm, okay, that was a trap. Until then, I didn't know. And I was waiting for confirmations to see. But when I saw just a sharp reaction, this is now confirming. I don't get in with our entries. I don't get in with just limits randomly. We always have our lower time frame confirmations to develop as a protection mechanism. So when that was not there, then we just wait. We didn't take a loss. But now I'm trying to readjust my read. So my readjusted read now is this was obviously a trap because we had that false break of structure and then another run of liquidity over here. Smart money trap, Asia low liquidity taken, and these lows. Overall, this liquidity taken over here. So now I can say maybe we're entering a nice area and I just want to see, for example, am I going to see anything off this zone? Potentially. I don't really have that much belief in that area, but I just want to read what price is doing in different areas. And I want to see what is becoming valid and what is the story that is being made. And remember, we are coming into our London window. So that's one area I want to just see what's happening, but that doesn't mean I'm going to trade it. What I want to be now reading into is that, is price going to come to this extreme area? I don't know. Is price going to be reacting off this base, which it has, based on this wick? Is price going to come higher, or if it's just going to respect this zone and continue and making a lower low, because we've had a run of liquidity and then push down, and that push down has cleared this area. So this could be considered a bearish leg, and I might see a reaction like this. So I just want to be remaining dynamic to that, but not married to that. So I just want to see what's going to happen next before I formulate any trade idea. Okay, price is given a reaction on there. Doesn't mean it's necessarily a trade. Now I'm seeing a bullish confirmation that we've had that internal break of structure and we've been met into this supply. So now I want to be just a little bit more cautious and read that again. So what are we doing? Let me just quickly check M5. M5 has shown me what? M5 has shown me that we've had the smart money trap run of liquidity, and this run of liquidity inducement could be the inducement of the day because it was in a valid time, which is Frankfurt session, and it has come into a supply area. Remember, we said from the low to the high can be the supply zone, from the low to the high. So it has mitigated that. It doesn't mitigate our preferred area. Preferred area would be all the way to this extreme, but it is following through the logic of what we mentioned earlier, where this was a prime mitigation, and then we've had that break of structure now. So we can establish that this main push from here to here, we've had a bearish main push and a reaction from valid supply areas. And then I want to see, once that main push has happened, we've got a smart money trap. So we had a build up in our Asia range, smart money trap, inducement with nice timing into a supply zone. And then the last piece of that puzzle is we also have a break of structure. After the inducement, we have a break of structure over here. So this area is quite a critical junction, because it's shown to me that we've got bearish intent after an inducement, and that inducement did a mitigation to the left, which is also muy bien. That's what we want to see. So now I just need to see the M1 confirmations to say, am I in a valid area? So we came into our M5 zone, marking out that imbalance. So with that candle, it's coming to that M5 zone, and I just want to see if it's going to come deeper to mitigate this extreme, or if it's just going to do an inducement of this area, minor inducement of that, because we had a fractal build-up. Inducement high. Now I just want to see, because we've got this internal structure, this lower time frame, we have internal high high, internal higher low, internal higher high, internal higher low. This is the complex wall. Internal higher high, internal higher low, internal higher high with a small inducement into the POI of the M5, and then we get this push down. When I get that push down, it's giving to me an idea of, okay, this could be now a bearish reaction off the supply zone after an inducement into a supply zone. And that supply zone is taking Asia high and smart money trap. And then if I keep going left, I know that I'm in a preferred area. Okay, because I'm in that supply zone of the follow through, and the supply zone of the follow through is from this point that led to a BOS now. So I know I'm coming to the extreme of a main push, and I know that this was a preferred POI that we've covered. So I'm overall building a case, and it's starting to align. You know, what else is the pieces of the puzzle? We've got a main push down after an inducement with traps all the way aligned. We know that that was a trap. We took liquidity over here, but this was the main trap of the day, because we had a smart money trap with Asia high, and then we got a strong follow through down, and that strong follow through down has given a base to react of, complex pullback, minor inducement with a break of structure. And the key last piece of the puzzle, we see from our session timing indicator that we have exactly on London Open, we get that minor inducement into that banker block supply area on M5, internal break of structure. This validates multiple cycles. It validates, number one, the structure cycle, supply zone follow-throughs, complex pullback, and lower time frame structure. It validates a liquidity cycle because we had the smart money trap, Asia high liquidity, inducement into supply mitigation, internal break of structure, and then mitigation over here with lower time frame build up, inducement over here on the left, mitigation of that left, and then break of structure. So now we've got a liquidity cycle, and then the daily cycle variation, obviously very clear because of what it is doing. When we have a run of Asia high and a run of Asia low, when both sides have been taken, what do? We fall back on our structure, and our structure is reconfirming that is more likely bearish. It doesn't have to be bearish all the way, but it can just be bearish to our demand area that we mentioned on H1. It can just be bearish into that demand area we mentioned on H1, which is down here. So price could just be doing a reaction from here, selling into this area. Once we come into that demand, we could continue bullish. So that's all the framework we need. We don't need to say it's going to be bearish forever, it's going to make a new swing low. We just know that for London session, for the immediate, what we are seeing most likely is going to be bearish to at least come back to this area, at least, because this could be a run of liquidity of Asia low, push out, bearish, and then bullish continuation. It could be that. So we are just selling with the pre-notion that more likely it is bearish, but we are not married to it, and that's how we protect ourselves with partials. And we know that from a daily cycle variation, it is giving Asia high, Asia low. So what do we fall back on? We fall back on our structure and liquidity, and structure and liquidity is saying most likely is going to be bearish for this London session. Then we get the London session volume kicking in, and when that London session volume kicking in, what are we seeing? Exactly on London Open, we get a minor inducement into supply, and then an internal break of structure. So that is giving me strong confirmations that I should be selling off this supply zone IFC with the imbalance. Price taps in, I execute on that trade. And then from the fixed partial protocol system that we mentioned in a previous video, which I do want you to watch, we're at 1 to 3, which is right here. A 1 to 3 risk reward, I want to be taking a partial. Okay, and then at a 1 to 10, I just want to see where that is, if it aligns with anything interesting. And then a 1 to 10, that's where I'm going to be taking the rest of my volume. So that's kind of the trade idea I have. Obviously break of structure on the internal BOS, and now we see that follow through. Now I'm all expecting is I want to be taking my partial here at the 1 to 3, perfect, but I want to see if there's going to be any reaction here. Once I see if there is or isn't a reaction, I'm going to see if I can hold it out all the way, but then the next target is obviously this low. So this demand area, so that's the main target, but I don't want to be taking a subjective partial approach. I just want to have my fixed protocols in place for taking partials, and this trade idea will be fine because our main target is going to be our full volume anyway, so we don't need to be worrying too much. So everything looks fine. So I've executed my trade, I'm break even, and I let the market do the rest. So just to pause, when this demand area that we mentioned, we didn't see any reaction, anything there. So we just saw a run of liquidity down, new lower low, no continuation or bullish signs, and then just lower lows forming. So this showing me that there was no reason to be looking for a buy as a hedge. And we know that this therefore was the bearish follow through, mitigation, and then making a new lower low, replication of that push. And now where we are most likely going to be targeting is going to be now this demand area over here. So that for that trade, we're taking partials over here, and then we just want to see if price is going to collapse to our second target. There we go, and eventually that target was met. Perfect. And then now we are just out of that trade completely, and then we'll just see the rest of the day on what other trades could have presented. But that's not for today's video, but this was just a breakdown of a very simple daily cycle variant trade paired with the liquidity cycle, structure cycle, and daily cycle with lower time frame confirmations, gelling all of these confirmations together for a very simple repeatable trade. This kind of trade, if you watch 2 weeks of price action on just one pair, you'll see at least once or twice this kind of trade playing out very consistently. It's very easy to execute on because there wasn't too much devil's advocate and element of doubt. So overall, a very solid trade type that I'm sure all of you can very easily start to apply. And then if we take one last look at our trade zeller, that's exactly what we did from the trade replay. If you remember, we had the Asia high smart money trap run of liquidity, break of structure, coming back to that extreme area, internal break of structure over here, execution, and then continuation, 1 to 3 risk reward, taking a partial, and then following through, continuing lower, and then over here at the 1 to 10 target, that's where we took full volume. So overall, 50% at 1 to 3 was a 1.5R, and the remaining 50% at the 1 to 10, that is 5R. So overall together, 6.5R, and that helped me bank around $8,000. So hopefully you enjoyed that trade breakdown, but not just seeing the profit of the trade and how I managed it, but rather the importance of how I was reading the story of price. But for this video to really hit home, and for this trade breakdown to really hit home, what I'd like you to do is check the recent video that I made on the partial protocol systems. That was a deep dive on how to take partials and correctly manage your portfolio as a whole for this video to make even more sense. So I do hope to see you in that next video right after this, and I'll see you there.